Hi, this is Mark with your analysis for the week commencing the 5th of October. Now, I have been away for 2 weeks, and generally when I come back I haven't looked at the chart. I had a complete break, and when I come back in this situation I usually wait a few days to try to feel the rhythm of the market before getting involved again. And it's even more difficult at the moment because prices are extreme on lots and lots of pairs. And you will have seen that the NFP news came out positive, much better than expected on Friday. And the FOMC, the Fed, are looking closely at jobs as to whether to raise interest rates, which will strengthen the dollar even further. However, there is the further complication then that the Fed may take measures to weaken the dollar, because at the end of the day it's not in their interests. So how do we deal with the week ahead? Well, the first thing to do is tread very carefully, tread lightly. We are some major technical points now. The euro has gone into free fall, and a couple of weeks ago when I was doing my analysis I said to you I believed that 125 was a good target on the euro, and we got down there almost to the pip the other day. We're now at a monthly trend line that goes back, I think this goes back to 2003. So this is yet another major area on this pair. So technically what would you do? Well, for me, I will be interested for a pullback as ever. And 128.50 is a good area because it's a monthly 200 EMA and everybody will be aware of that one. And the other option is if it continues into free fall, I would let it break and clearly close below this trend line around 123.90, 12400 even, before getting involved, then looking for a pullback. And just to substantiate my theory of this area, if you're looking here, anywhere around here, 12800, that was the previous trend line break, you will be looking for a pullback anywhere up around that area. The next option is then to go looking at other euro pairs. And for example, the euro pound traditionally, technically, tends to break lower and pull back, break lower and then pull back. And it did it again the other day. We're still respecting this bottom trend line, and this goes back to 2013, so another major area. And then it stopped at 78.31, which is another line I've had in place for ages, and that was because it was previous major support and resistance going back a long way. The euro pound also tends to respect whole numbers as well. So what do you do with this? If anything is going to pull back, because the British pound's in a bit of a mess at the moment as well, and lots of negative news, then I would favour the euro over the euro pound. And where do you look to get in? Well, 79.50, 61.8. The best area, of course, would be 80. So if we get a pullback up there, I would be interested to short. I'm only interested to short anything euro related at the moment. You look where it stopped at the moment. It's a double treble bottom down here. Again, the other option is that you wait for a breakout and a pullback. I would only look for breakouts and pullbacks on daily charts at the moment. Anything less and it's more likely to be a fake out. Another one is the euro CAD, and the euro should be falling against the CAD, but we've had some negative CAD news of late. So ideally you're looking for a pullback, and the best place up here is 43.50 for me, and that's this monthly 200 EMA intersection of a trend line, 50% fib of the recent move. Anybody mentioned multiple reasons, so that for me is an interesting area. Once again, if it breaks and closes, I would need it to break and close below the recent low. Look how for the last 5 weeks prices simply sat on the monthly 55 and this weekly 200 and its major previous support and resistance, and we've then got, we've had the whole number not far above. So ideally I'm looking for a pullback. If it was to break, I need to break this low again on a daily, pullback and a move south. The other option is, if the euro is not going to play, is look at the dollar Swissy, and this is the dollar Swissy on a monthly chart, and we have now broken this monthly 55 EMA, and therefore you are looking for a pullback, and a pullback, initial pullback anywhere at around 9,500. I will be interested to long this pair. This trend line here I have in place, this goes back to 2003, so a huge area, and we have a lot of free space in there, so perhaps the Swissy is a better option over the euro. Another Swissy one I keep watching, this is the euro Swissy, and the Swiss National Bank started to buy euros back in 2011 because they didn't want their currency to get too strong. It gets too strong, it kills their exports. In a previous venture into intervention many years ago, the Swiss bought $179 billion US to weaken their currency, and it was actually 30% of their GDP. There may come a point where the Swiss stop protecting this, and if they do, and this was to break, you could be on for a big move down. You would expect the Swiss to get involved again, but at the end of the day, they're having to print money left, right and centre to prop this up, and there's a potential here for a 1,000 pip drop to the previous low when they got involved last time. So certainly one to keep your eye on a daily basis. This is the British pound, another one, free fall. We broke 170 because Governor Carney started talking about interest rates going up sooner than later, and then promptly he turned around and said the exact opposite, and it's in free fall again. Monthly chart, we've had a down move, a continuation of a down move. What the heck do you do? Well, once again, a pullback for me, and the area for me is 162.50. It's this 55 EMA monthly. It's a trend line that goes back to July, and we've also got the 200. So really, anywhere around 162.00, I will be interested for a short. Not interested for anything else. The significant thing here, we have broken 160, and we broke it by quite a few pips. So it may only pull back to 160 and drop, but personally I prefer something more. The thing is about this job news is that researchers, on the face of it, it all looks very positive, but the analysts are going to spend the weekend chewing over this one, because what's happening is that the grandparent generation, the 55 plus age group, are the ones where the jobs are growing, and the sort of driving force of the economy, the ones known as the prime worker demographic, the younger ones, those from 25 onwards, who are supposed to create wealth and jobs, etc., they are actually falling in numbers. So it could be we get pullbacks because the analysts start to look a little more closely. What on the surface looks positive for the US may in actual fact be all part of their smoke and mirrors once more. Just to confirm, 162 is a major area. It was also 50% of last week's move. Another one I'm watching, this is a pound CAD, and before I went away, the price was down here. I said to you, look for bounces back down again, 81.50, and it's done it again. And this trade is currently 200 odd pips up. So the pound CAD, watch news this week, see how the tone changes or not. But anywhere down here I'm interested to long, and anywhere up here I'm interested to short. Aussie dollar, dear old Aussie dollar, shown you many times how this pair tends to respect fibs on longer time frames. This is a weekly, and when I was going away it stopped at 23.6. We've now stopped down here. It's a double bottom, 100% of the recent move. I think it's oversold, but the Aussie government want this down at 8,500, so it is possible that it will go further. I personally want to pull back again. This chart's not going to give me any news. The other option is you wait for a clear break and close below this recent low, and then a pullback. But for me, I would prefer a pullback now. Where would it be looking? Well, 90 is a logical area, but it does seem a long way away at the moment. It may be, guys, you just got to leave this pair alone for a while. Aussie dollar yen. Now another one. This is daily chart. Last 5 days, it has bounced off the 200 EMA and 78.6. Everything's starting to roll over, and it does look bearish. And therefore, again, I would be interested in a pullback anywhere around 96.20. Dollar yen, set off, gone. After months and months of going absolutely nowhere, it's set off. And we now have another pin bar candle at the top of this weekly move from last week. Once again, guys, I need a pullback. I don't trade at extremes. Some people will be looking at this for a swing trade back down, perhaps at 110. Huge psychological level and support and resistance area in the past. Again, it's not for me. Everybody's buying. I'm not interested in selling at the moment. Best area for me is all the way back down 105, but for now I'm going to leave it. Similarly, the CAD, the USD CAD. Now, the positive US news, and there has been weak CAD data over the last few weeks, but we're at a double top, major area, and price previously hit here, spiked, indecision, and back down again. I've been longing this since the start of the year. It pulls back down anywhere around 108.50. I will be interested. Your other option is wait for a break and close above the high again on a daily candle, no less for me, and then for a continuation move further on. Euro yen. I showed you a few weeks ago, I have adjusted this slightly, how we were in the down channel, and even though it burst through, it then pulled back down. This is weekly, remember guys. We're now in the middle of this channel, so for me at the moment I'm tending to leave it alone. If it pulls back up here anywhere around 140, I will be interested to short. Other ones I've been watching, Euro New Zealand dollar. The euro still, the interest rate differential in the Eurozone is still huge, and there's all chances of QE. So I'm interested in this to short, even though the New Zealand economy is not very good. But this is just indecision. This is weekly. Can't make your minds up. Leave it alone for now. Finally, the New Zealand dollar CAD. I'm in some exotic pairs recently. The New Zealand dollar has been struggling because of the price of milk, but their interest rate differential again is higher. I'm interested to short this pair, and I will be waiting for a pullback all the way up to around 90. Okay, that's it for me for the week ahead. You must watch those calendars closely. The news this week is likely to be the thing that drives what's going on, particularly the FOMC news. But equally for the Aussie dollar, euro, there is big news this week. Keep your eye on it and trade carefully. Have a good one.